Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, September 27, 2012. Well, a continuation of the trend to the downside today, and we've been in this downtrend for quite some time from this tweezers top harami type pattern, and today we haven't had a change of trend technically, but we have had in bar chart terms an outside day, and outside days are very often signs of a potential change of trend. This is a day where we've seen the buyers act strongly enough to take out the previous high, but the sellers were also strong enough to take out the previous low. So it is a candle or a bar of a lot of indecision, and that's because we have strength from both parties in this market. But analysing the current candle in terms of the colour of the body, which is important with candlesticks, it has turned white, and white means that the buyers have made net bullish progress. And if we look through this series of candles in this downtrend, most of these candles except one have been black bodied candles where the sellers had downside momentum in net terms between the open and the close for most of those trading days. Today that has turned around, and it does set the market up for a potential change of trend. So we are looking for this market to make a higher high and a higher low. Also, in terms of candlesticks, we've seen the buyers take control of this market, closed up towards the high, and the sellers lost commitment down below the 128.57 area, where the market tested to yesterday as well, and I highlighted that as a very important area. And we've seen strong upside price rejection with the sellers losing commitment down around there, and the buyers have come back quite strongly for today's trading to close up above the well above the midpoint level and towards the high. If we just have an interesting look at this, if we look at this candle here where there was strong upside price rejection for today's trading, there's been some minor downside price rejection from that area, and this highlights how areas of support and resistance can change the way that they behave. So an area of previous support has now become a minor area of resistance. It's only in a minor way, so let's watch that level for a potential higher high and higher low. In terms of candlesticks, again, this is a potential Japanese candlestick bullish engulfing pattern, and that's where the body of the current candle engulfs the previous smaller black bodied candle. We have a white body now, and it is usually quite a strong indication of a change of trend. So this does set the market up for that potential change of trend to the upside. In terms of the trend lines that I've drawn here, we had this trend channel that I've drawn, and it could be extended. It's not in play at the moment. If the market does trade substantially lower, it might come into play. But here we have the market interacting near this faster time frame trend line in the light blue colour. We haven't traded to yet. If the market does move sideways, it will come into play, but a break of that to the downside would mean a loss of momentum, but certainly it doesn't look like that's going to happen over the next few days. It certainly does look as though this trend will change to the upside, and the market does have strong potential to test to the 129.68 area of resistance. In terms of the Fibonacci extension, and here we see for the previous two trading days now the market has interacted with the 261.8% area and has been strongly rejected from there, and that does set the market up for a change of trend as well. And in terms of the Fibonacci retracement as well of this previous strong first time frame uptrend, the market has found support exactly at the 50% level. We tested down to there today. We were rejected in a very strong manner by the buyers. They've taken control of this market, and it does set the market up for that change. In terms of Ichimoku, we have a bullish market in the long-term time frame by trading up above the cloud. We are trading a long way above the cloud, so the market is looking a little bit overextended, and it's little wonder that the market did begin retracing back towards the cloud to some degree. But the market did find support at the Kijun Sen, and the Ichimoku indicators will act as areas of support or resistance. So today we've seen the area roughly around the Kijun Sen act as an area of support. We are trading up above the Kijun Sen, so the market is bullish, but we are now trading down below the Tenkan Sen, so we do remain bearish in the short-term time frame by trading down below there. The market is attempting to rally, and if we do rally up to the 129.68 area, it will offer some very strong resistance. We do have the Tenkan Sen trading in that area, so that will make that a very important area of resistance. But overall, in big picture terms, the market's bullish in both the long-term and the medium-term time frame. We're bearish in the short-term time frame, but the short-term dynamics are no longer supporting the sellers. The buyers have taken control of this market. It does seem that the market will rally, but we do need to break out through the 129.68 area of strong resistance for the market to trade higher.